Hi there, good morning. My name is Victor Ali, and I'm the head of investments at Sankore Global Investments. This is your weekly financial markets roundoff. We start off in the US, where stocks closed higher on Friday, particularly with the Dow Industrial Average closing or hitting a fresh record high. It's closed up 0.62% to close above 40,000 points. This is the second time that it's hitting that mark. It did that first in May. Friday was a record close as well. The S&P gained 0.55%, while the Nasdaq was up 0.63%. Now, for the week, the S&P gained 0.9% for this week. Its fifth positive week in six. The Nasdaq rose 0.3%, six positive weeks in a row, while the Dow was up 1.6% for the week. This was its best performing week since May 10th of this year. Sentiment was really held up by better than expected CPI reports, which basically reinvigorated calls for a September rate cut by the Fed. The Fed chairman had a testimony at Congress earlier in the week where he alluded to the fact that they had seen, good improvement in inflation, but however, going to continue to monitor the trend in inflation. So that downward trend that we saw after his testimony basically gave the market further impetus that these were some of the signs that the Federal Reserve needed to further strengthen its resolve to start to dial back on interest rates starting in September. Inflation came in at 3% year on year, slightly lower than the 3.1% that had been expected. Again, continuing that downward trajectory that we had seen in the inflation number. Also, in a sign really that the rally was sort of starting to spread in the U.S. market to other sectors, particularly fueled by, obviously the CPI reports. The Russell 6000, which essentially is a small cap index, jumped by about 6%, for the week, and then added 1.1% on Friday. Also, we saw the PPI number, which was slightly hotter than expected, which came in on Friday, but seems like the market, really largely ignored that. We also saw earnings last week from a number of banks. We saw earnings from Citi, JP Morgan, and Wells Fargo. Citi and JP basically beat expectations on both top and bottom lines. However, Wells Fargo kind of disappointed on its interest income elements. Nevertheless, these results were, not significant beats, so it didn't really have a major, impact on markets. For the remainder of this week, really, a lot of attention will be focused on, the continuation of Q2 earnings. About 40 S&P companies are slated to release their results this week, so that has potentials to probably extend the rally further or create some bump on the road, for the rally. Also, on the political development, really, over the weekend in the US, the attempted assassination of Donald Trump, that is something certainly the market will continue to keep an eye on the developments around that to see what sort of impact it is likely to have on the market. So for the US market this week, obviously, developments on the political front, as well as earnings, would be front and center and largely the determining factor for market direction this week. Over in China, the Chinese government released a slew of data over the weekend, economic data really. So GDP for Q2 came in at 4.7%, slower than the 5.3% that we had seen in the first quarter of 2024, and also the 5.1% really that was expected. Retail sales for June rose 2%, missing a 3.3% expectation. Industrial production, however, beat expectation, growing about 5.3% as against the 5% that had been expected. Inflation came in weaker, 0.2% year on year. The market had expected, or analysts had expected, a 0.4% increase. And this is really continuing to stoke fears of a deflationary trend, that is taking foot, in China. Fixed asset investments rose 3.9% through June. Housing wealth, which basically measures the sort of wealth that sits within the housing sector, rose 2.3% in 2023. However, this is a very, very far cry from the 13% annual pace of growth that we had seen between 2016 and 2021. So this clearly is a reflection of the continued woes that, the beleaguered, housing or property sector or market in China, continues to face. Youth unemployment remained high at 14.2%, while urban unemployment was at 5%. Exports rose 8.6%. It exceeded expectations, while imports fell 2.3%, missing the expectations that had, been penned down for that number. We also saw a weakening in credit demand, a sharp drop, in broad money supply. Household loans rose by 1.46 trillion yuan between January and June of this year. as against the 2.8 trillion yuan that we saw, within the same period of last year. So this is obviously, a significant reduction. Also, loans to businesses increased by 11 trillion yuan between January and June. This is also less than the 12.81 trillion yuan that we had seen between January and June of last year. So clearly, credit conditions are certainly contracting, in China. Also in China, the third plenum will be happening this week between Monday and Thursday. It typically is a gathering of top party members or top members of the ruling party, and it typically happens once in 5 years. It's a meeting that is used to set long-term strategic policy direction for the Chinese economy. This meeting really is expected to focus on fiscal and other structural reforms. Although a lot of people are expecting some policy direction really with regards to the property market. I think the key issue really is that a lot of the fiscal issues need to be addressed, structural issues need to be addressed that will then create leeway for the government to properly intervene or create policies that helps the government intervene in the property market. So it really remains to be seen what pronouncements will come out of this meeting, as it could really prove very crucial in directing the Chinese economy, at least in the near to the medium term. In Nigeria, locally, the tight liquidity situation in the fixed income market really continues to hold sway. The T-bills market was largely quiet and also bearish. Participants were essentially looking to the primary market auction that happened on Wednesday for direction. So earlier in the week, market was bearish and, sort of just looking to that auction as liquidity really remained very, very tight. At the auction, the DMO offered about 166 billion across the three maturities. Subscriptions came in at about 308 billion. It allotted about 207 billion. If you compare the stock price to the previous auction, the 91 and the 182-day paper really remained unchanged. However, the long paper, that's the 364 paper, saw a 56 basis points increase in the stock rate. And that just basically stoked, bearish sentiment even further in the market towards the end for the remainder of the week, really. If you look at the bond market, sentiment was largely the same. It was bearish, and there was a lot of selling pressure during the week as well, particularly on the 2031s, the 33s, and also the 34s, where offers went as high and stayed as high at 21% handle, level. There was supposed to be an auction today, bond auction today. It was, however, postponed, till next week. That announcement came during the week. The expectation was that announcement was probably going to help slow the sell-off we were seeing, but it really didn't do much to that. The sentiment remained really, really bearish for the remainder of the week. Also, over the next 2 weeks, we'll be expecting coupon payments on FGN bonds, about 281 billion. This could, prove, crucial in determining at least near-term market direction, because, a lot of those funds would largely look to be reinvested. It really remains to be seen how that would impact markets. Also, inflation figure for June should be out today. It'll be important to see what that number is, as it could have an impact on where the fixed income market goes from here on out. So that's pretty much it for our updates. In the US, we're looking to earnings and also continuing to monitor the political situation. While here in Nigeria, the liquidity situation in the fixed income market, the inflation number we're looking to see today will prove crucial in determining near-term market direction. Thank you very much for your time. Do have a very, very productive week. Thank you.